The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 10th. Wonderful Wednesday edition of today's Midpoint Report. I guess that's what we'll call it, on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a wonderful Wednesday. Let's make sure we do everything we can to have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, when we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw out at us. Today, we'll go take a look at the circumstances of what the Bulls and the Bears are saying out there, and I'm absolutely grateful for your presence here this afternoon. I'm here to serve you. Feel free to pick up that phone. Dial on it at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Wonderful Wednesday, of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 254 points, trading out at 18,018. S&P up nice 27 points, trading at 2106. Composite up 68 points. That's trading out at 5,082. Russell 2000 up nearly 20 points right now, trading at 1268. The DAX finished up 264 points. The FTSE finished up 76 points. Gold is up $9. Silver is flat. It's up a penny. Light sweet crude is up 47 cents. A whopper of a move by Netflix, up $34. Priceline's up 21. Google's up about $11. HCC Holdings up $20 out there. To the downside, Regeneron Pharmaceuticals off $17. Asparian Therapeutics off 16. Sears Holdings down 7. But is this a surprise to anybody out there? No, not if you've been listening to the show out here, because when I reported back for work on Monday, and we're going to go ahead and do that right now, it's always about a matter of keeping things in perspective. It's exactly what I said out there. And by perspective, it said, okay, where are we in the markets? Well, let's go start off by taking a look at the New York Stock Exchange. What I've got up on my chart, on my screen here right now, if you're following along with us at home, is the New York Stock Exchange. We're just simply going to go ahead and take this back into March of 2009. We are in a bull market. We are still in a bull market, okay? In bull markets, you don't have counter trend rallies. You have bottoms that form out here. That's exactly what I said, suggested to you that the market was doing. The market was in the process of making its next bottoming pattern. That is exactly what it has done, what it did yesterday. We're now having that follow through today. If we take a look at trends, they're all intact out here. You've got the larger trend. That's the big, long, white diagonal line on my screen out here. Just simply using the touch points of the lows here from March of 2009. Then you've got the October 2011 time period. Of course, off that October 2011 time period, we've got several touch points just to show you an intermediate period trend out there. And that's this other white line. And you can see that's really where the Ebola October 2014 lows, they came right into that trend, bounced right off of that, even if we see price pull back today, tomorrow, the next day, whatever it is. The trend is its friend, and that is still intact out here. So a nice move inside of the New York Stock Exchange. Let's switch over. Let's go take a look at what's going on inside of the S&P 500. Again, these are weekly. This is a weekly chart, by the way, that I'm showing you on my screen out here. Those horizontal lines that are going across it, the green ones and the red ones, those are your monthly and your weekly horizontal trading range boundary lines. The S&P 500, it's a blue line that measures the trend off of the 2009 level, and it's a white line coming off of the 2011 area. That trend has not been attacked. Every time it's been attacked, it is held. We are in an uptrend period. What has occurred in the markets? Very simple. The market has formed its next bottom. What is that bottom going to do? It's going to go ahead and take prices higher. Is it going to be a straight line move? That I can't tell you. What I can tell you is that the expectation on Monday, while everybody was, worried about the boogeyman, Stevie came to you and said, no, 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 that's not what's going on here. What the market is trying to do is to form its next bottom. Well, we've got that out here big time. So the S&P 500, look, it still has resistance out here. It's going to get up and it's going to try to test that 2138 level. Maybe it takes it out. If it takes it out, you got 2183. You can't, we have to anticipate is where the market is moving to next. So where the S&P wants to move to next is 2139 out there. What's going on if we take a look at the Dow? Let's go take a look at it. Big move today. Last I checked, all 30 stocks inside the Dow were to the upside. We can check in on that later in the show. In the case of the Dow, she's got just simply resistance at this 18,226 level out here. It's first got to clear on the weekly basis. It's got this little horizontal trading range resistance level at 18,078. That's its next target, 18,078, and then 18,226 or so out there. If we go take a look at what's going on inside the NASDAQ composite, powerful move out here as well. Let's go take a look at it. It is in full out blown bullish mode out here. Take a look at this weekly. These are weekly charts. Now, it's only Wednesday. We're only halfway through the day on Wednesday out here. But one thing that you can absolutely notice when you take a look at the chart over the course of the last 4, 5, 6 weeks out here, starting with the week that began May 4th, so the beginning of May, take a look at during the week how the bears tried, at some point in time during the week, tried to push prices lower. You know, typically you want to be focused in on paying attention to the body of the candle. The body of the candle is the essence of price. Those wicks, the upper and the lower shadows out there, the upper and the lower wick, nothing more than just the extreme emotion. But there are times where that extreme emotion can provide us with an important message out here. Just take a look at the week that began May 4th. Look at that long wick out there. What was it telling you? Who had control during that week, really? Who really had control? That's right, buyers. Buyers had control. Let's take a look at the very next week out here. You saw price try to move down. Who was in control during the week that began May 11? Buyers. How about just this week? Take a look at the week's not over, so anything can happen out here. I can't control it. Look, what we know is that the composite, that's going to go ahead and try to tackle this 5117 area. That happens to be the weekly horizontal trading range resistance level. You get above 5118, and price will move up to its next level. What's that next level? Well, it'll go test that all-time high as well as probably make a run for the 5414 level out here. But the bottom line is, we take a look at the NASDAQ composite, it is buyers that they're clearly in control of the game out here. They've been in control over the last couple of weeks. Every time the sellers have tried to take some type of action, it has presented a buying opportunity. No different than yesterday, no different than today inside the market as we take a look. So we covered, let's go take a look at the Russell 2000 out here. In fact, let's go take a look at the index ETF. So first, just to keep things in perspective out here, these trends, we're in a bull market. So we cannot call this a counter trend rally, for goodness sakes. It's just no counter trend. It's the buyable bottom until we start to see the market do something else. But right now, that's really all that's going on. If we take a look at I said we'd go take a look at the index ETF. So let's go do that out here. And let's go take a look at that. But I specifically stopped at the Russell 2000 because we're going to take a look at the IWM. That's going to be a little bit easier for you guys as you're doing this at home. Here's what I want you to notice about the IWM. Number one, it's trading inside its April 15th swing point. Now, the low of that swing point is 125.92. The volume on that swing point, by the way, is 37.2 million shares. It's 1:15 in the afternoon. It's done 25 million shares. It could take the rest of the day off, but it looks like a pretty darn good chance, PDG, that it's going to go ahead and do 37 million shares. That price is moving up into a swing point with volume out there. What does that say? That says to you and I that at least the April 15th is going to be tested out here. 127.13 is the number. So expect a test of that area. Doesn't have to be today. In fact, it likely will not be today. It'll be sometime tomorrow, Friday, what have you. And it's a very good chance that that level is going to be taken out. That level is going to be taken out, forming another A to B equals CD to the upside. The Russell 2000 giving you and I a huge message as to what the market wants to do next. It's already inside its all-time swing point high out there. You know, the Russell 2000 2000. It's trying to get up to the 1350 level. That would be 135 and change inside of the IWM chart. Russell 2000 breaking out over that long-term consolidation. There's absolutely no reason, none whatsoever, that I can find. If you can find it, give me a call. Tell me what it is that I'm missing out here as we take a look at what the IWM wants to do. It wants to go ahead and make that measured move and get up to 1350. What it's already going to do, it's going to close inside that swing point. Look, whether it's done with volume or not, once you close inside a swing point, you're going to typically gravitate up either to the high or the low. If you're moving higher, you're going to gravitate up to the high. If your price is moving low, you'll gravitate down to the bottom. But look, it's not just the IWM. Let's go take a look at the Dow Diamonds. The Dow Diamonds, man, we talked about this on the show yesterday. And what we looked at two different swing points. Actually kind of surprised me. I didn't realize it at the time. But you and I, we looked at May 8th, or May 6th. May 6th, we took a look at the swing point low out there, which was 177 and a quarter. 7.5 million shares on that day. And yesterday, what did we do? Well, not you and I, but what did the Dow Diamonds do? Slap me inside the face here. 4.7 million shares and rejected that level. That's a rejection of a swing point low with light volume. If anything says you can't bust them down, it was yesterday inside the Dow Diamonds. But heck, not to be outdone, the Dow Diamonds said, I want to give you double your fun, double your pleasure out here. And the Dow Diamonds actually got back and they tested that swing point low from March 26. Well, they tested the high of that swing point from March 26. And the high of that swing point was 175.46. And the volume on that was 6.6 million shares. You can't bust them down. What are you going to do? Well, it's almost trying to do it in one fell swoop out here. Certainly, it's going to go ahead and bust them up. What does that mean for the Dow Diamonds? Well, the first thing that it means is that the price is going to go make a run for 181.75. That's its TAS market profile high. That's the resistance level. That's the last time the price was up here, which was on the trading day of June the 2nd. I got up to a high of 180.12. So was that the right price? No, probably not. 181.74. So 181.74, 181.75. The Diamonds are going to go ahead and make a run for their highs. Now, what I would also suggest, if you're watching this on Tiger TV, there was a little bit of a descending price channel. That's clearly been broken with a wide-ranging bar. I don't believe the price is going to come back and test it. It could. You like to see that, but I don't know that it's really going to do that. I think it's just simply going to be like the rhino overrunning Stevie, and it just simply says, hey, I'm just simply going to go make a run for that 181.75, maybe even get up into the highs for May 20th in that 183 level out there. That's what's going on inside of the Dow Diamonds. So we got big messages from the IWM, big messages from the Dow Diamonds. Inside of the SPYs and the QQQs, a little different take on it. If we take a look at the Q series out here, I take that back. The Qs actually tested their swing point with light volume yesterday and rejected it. Another example of you can't bust it down. Can't bust it down because you're coming down with what? With light volume. 42 million shares yesterday were tested with what? Are you kidding me? 27 million shares? That's all the gusto that the Qs had to move to the downside out here. Not a chance. Now what are the Qs doing? The Qs are going to go ahead and they're going to make a run, certainly for their swing point. That swing point is April 27th. The low of that is 110.02. That's the area to be watching. You get up inside there with more than 31 million shares, guess what you're going to do? You're going to go test 111.16. This is Steve Rhodes with TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 245, S&P's up 25. The question that came in was, well, why can't this be a counter-trend rally? Well, the reason that it can't is because the trend is to the upside. That's really why we took a look at the weekly charts out there. We took a look at the trend lines that are out there. The market's still in a bull market. The trend is still to the upside. And you've got to anticipate that what the markets are doing as they're pulling back is they're just simply creating these buyable bottom areas out here. You know, just as an example, here's the Dow. We took a look at the Dow diamonds, but here's the potential descending price channel that's in play. I don't know where the Dow is going to end up the day. Could end up inside this price channel, pull back into about the 17,965 level out here. But the markets are just simply forming. They've either formed, I think they've formed now, the next bottom inside the market. You know, all signals are, you got the, look, when the Russell 2000 is the leader out here, and the NASDAQ Composite is the leader out here, that's a bull market. Those two are going to lead things down. They're going to lead things up. You know, all what's talked about is the Dow out here, you know, Dow Schmau. But it's really, you know, you want to understand who is it that you're drafting behind. And what you want to do, you want to be drafting behind the Russell, and you want to be drafting behind the NASDAQ Composite out here. And those are the two leaders. And if we take a look at the summation index, you know, we looked at the IWM. We know that the IWM is trading inside of its swing point. So, you know, unless that gets rejected today, and even if it does, it's moving into it with volume. you move into a swing point with volume. Even if you get rejected, you're back up there to go ahead and test it. Take a look at the NASDAQ composite. So, of course, is at 120 as of 126 in the afternoon out here. We just simply use that price oscillator. You're back above the zero line. Now, there's been a little bit of a tug of war inside the price oscillator basically every other day, it seems like. But the sellers aren't able to really push things to the downside. Nice explosive move today. Nice bullish reversal candle signal out here. The NASDAQ composite's going to go ahead and make a move for that resistance level that we talked about. And if it breaks through the resistance level, then it's really off to the races. Off to the races for one heck of a summer swoon out here. And that's with regard to the NASDAQ composite. The Dow, it's done all the work that it can with all of its issues being in the green today. It can't really get above the zero line in its price oscillator. And the New York Stock Exchange, that would have to get basically virtually every single issue to be positive to advance today. And that's not realistic. I've never seen it happen. I would not anticipate that it would actually happen today. So that's what's going on in just simply the overall sense of the market. Now, on an intraday basis, what you and I should expect is we should expect a little bit of a timeout here. We should expect the market to pull back. So if that's what it does, don't start getting caught up in the theory, oh, it was just a one-hit wonder, a one-day wonder, was overdone. It was a short covering rally. This is a 30-minute chart of the ES Mini of the S&P futures contract out here. And we've got basically two seventh-inning stretch candles. That's the letter G that shows up on my screen out here using the Chapman wave. What Stevie likes to do with the wave pattern is just look for those seventh wave candle signals out here because they identify excellent turning points, just as it did as we take a look at the blow that was put in here yesterday at the 6 a.m. time frame. You got that nice little seventh inning stretch to the downside. Now, forget about the rising price channel, the blue diagonal lines on my screen out here. The bottom's the important one to take a look at. The top one, maybe, but I'm not too worried about that. What I do know is that the market has exhausted a ton of energy to the upside. And so, you know, it's 1:30. It could easily pull back here for the next half hour, hour and a half, 2 hours. But as long as it holds the bottom of that rising price channel out here, that really becomes your buying opportunity. I do not believe price will pull all the way back to that level. That'd be about the 2087. But to expect the market to pull back, I just want to give you the right end. I want you to be able to anticipate what the market is going to do, just as I did for you on Monday. Even though many of you might have been going, you know, he doesn't know what the heck he's talking about. Maybe, just maybe, I do know what I'm talking about out here. If we take a look at what's going on inside the NQ, if we take a look at the NASDAQ on its 30-minute chart out here, same kind of pattern, although it doesn't have two seventh-inning stretches out here. It's just got the one, and we're in it right now. So we don't have a confirmation of that seventh-inning stretch move to the upside. That earliest that could come to both you and I would be at 2 o'clock. So we'll see what happens there. But it's we're reaching a point in time here where the markets ought to give back a little bit of those gains out there. Maybe the bear, maybe you're loading up for bear and you're going to go short all over the place. If you do, just simply use a stop out there. Use a stop. I can tell you all the signals are that prices want to move further north. And very likely they want to move further north for a little bit longer than you actually anticipate out here. Oh, yeah, don't forget, it is the sell in May. However, sell in May is a 6-month cycle out here. That does not mean you sell on May 1st. Not unless you want to get run over like a, I don't know, not unless you want to get run over. This is Steve Rhodes with TFNN. We've got the Dow. She's up 246. S&P's up 25. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Request to go take a look at Goldilocks. Let's go take a look at gold, silver, light sweet crude, currency pairs, the XAU. In fact, yesterday we took a look at the XAU yesterday. Let's start off by taking a look at the XAU. The XAU formed a nice little hammer candle a couple trading sessions ago. That was on June the 8th out here. Didn't get any follow-through yesterday. Didn't break it to the downside. That's okay. But you always like to see some follow-through at the upside. You did not see that here yesterday. You know, the real key level to be watching in the XAU is going to be $67 even, Stephen. You get a close below that, you know, and what's going to happen is you're going to get at least a run down to the lows from March 11th, and that's at the 66.10 area. If you break 66.10, what you're actually looking at is an A to B equals CD to the downside inside of the mining equities out there. Now, that is going to be what the outcome is if, in fact, gold is unable to bust out to the upside out here. Now, unfortunately, unfortunately for us that are following Goldilocks, gold's basically been doing bo diddly, really since about the February 17th timeframe. This little blue box that's on my screen out here is basically the trading range for gold. It's a nice trading range. If you are an intraday trader, you can make a ton of money trading gold. But with regard to the long haul out here, it needs to break above 1235, or it needs to break below the 1150 area out here. And until it does either of those, what we don't know is really what direction is it going to go in. But here's the deal. Just as we took a look at the XAU, and maybe from the XAU we get the early signal with regard to that hammer candle that's out there. If, in fact, gold is getting ready to make its next move lower, and that's the camp that I am now coming from out here, is that gold may be getting ready to make its next move lower. It's going to be a doozy, because when I say a doozy, you're talking about your A point being out here at the January 22nd level, your B point being down here at March 17th, and your C point as we speak right now is down around up at the May 18th area. And that'll give you a price move down to about 1067 to 1022 inside of the gold contract. Now, we don't know. I don't know about you. I don't know whether gold's going to break to the upside or to the downside here. I just simply know it's trading in a sideways consolidation. If you're trying to take some type of longer term position, trade it from the downside. Wait for gold to get down into the 1150 area. And if you're going to trade it from the short side, wait for gold to get up into the 1234 area. Have some relatively tightish type stops and be willing to change the position to flip it to the other side if either level is broken. That's the best way that I can come up with for you to play, for you to go ahead and trade gold, unless you're an intraday trader. And then I say go down to some short-term charts, because there's some nice setups that are occurring intra-session, so to speak. If we take a look at silver, high-ho silver, you got silver trading in the April 24th swing point, or right around that level at 1592. You're at 1595 right now. We're not seeing a whole lot of energy inside silver. Looks to me more likely that silver, what silver basically did was it made a Gartley sell pattern. And that's where I'm really coming from. The ultimate outcome of any Gartley pattern. Let me show you, in essence, what that looks like. Let's take a look at it. Let me do this here. Let's do this. Let's clean up the chart. Let's clean up the palette and turn some things off. Then it'll be a little bit easier for you to see what it is that Stevie's looking at out here. So we'll get rid of volume. We'll get rid of that. There we go. So now we've got a clean chart. So on the clean chart, let's just take a look at a retracement from the high out here on January 21st down to the low on March 11th. What is it that you notice here? What you should notice is that price made a 0.786 retracement, got up to $17.82. As it did that, it was also completing an A to B equals CD pattern. Let's go ahead and put that in here. Your A point's down here on the low from March 11th. Your B point is up here, looks like on March 26th. Your C point is right down here on April 24th. Makes just slightly above a 1-to-1 A to B equals CD to the upside. That's a Gartley sell pattern. Well, it really wasn't a Gartley sell pattern until, voila, this day right here. Big, huge bear sash candle out here. And that's on the trading day of May 19th. Took back, 3 full trading days worth of activity out there. Had a little bit of follow through the very next trading session. What I mean is it didn't really eat into that bearish reversal signal out here. So this is a classic Gartley sell pattern on a daily chart, and that is for silver. Now, I'm going to go ahead and delete those patterns out here because you've got those etched in stone. And now let's go take a look. Now, a Gartley pattern has 5 possible outcomes. Let's go take a look at the ones that it's already achieved out here. Your outcomes are going to be that it's going to make a 0.382 retracement. Check that off our box, because it most certainly did that on the day of, it really did it on the day that it created that bear sash candle out here. Truly. And you know that market stone and on wide-ranging bars to the downside out here. It went ahead and confirmed that on the day of May 26th. Level number 2 on 5 is that it's going to make a 0.618 retracement level. Well, let's face it. What did it do that with? A wide-ranging bar. Market stone and on wide-ranging bars. What does that say? And we've got some small-bodied candles out here, but there's not a thing that is bullish about this looking stock chart for silver. So it's made it to the 0.786 area, give or take a few ticks. What does that mean? That means you've done level 1, level 2, and basically we'll call it level 3 right now. So level 4 is it's going to make 100% move of a move. What does that do for silver? Takes you all the way down to the lows of March the 11th out here. If it busts those out, that's where you're going to go ahead and you're going to get an A to B equals CD to the downside inside of silver. Is it going to play out that way? I think that it is. I actually think that it is. Somebody sent me an email. A client sent me an email yesterday asking about the CFTC COT data, which I didn't get a chance to look into over the weekend. But he sent me an email. I went ahead and pulled the data up on my screen out here. And the question was, hey, gold wasn't really telling him a whole lot. And I was kind enough to say you're absolutely right, because he thought he was confused, that he didn't really understand how to read the COT data. But he really did, because gold is not giving you any kind of equivocation on what it really wants to do out there. But silver is. You know, late last night I went in and said, well, let me go see what silver's doing out here. Commercial traders have loaded up to bear. They're not their highest levels possible. But with silver trading at $15.96, the commercial traders have loaded up to the short side. So large commercial traders, presumed to be the smart money, even with price having pulled back to this level, have loaded up anticipating that price is going to move lower out there. So just something to think about. They're certainly not loaded up the other way, where they are less net short, saying, hey, I believe that prices are going to move higher. So is silver giving us a message that gold is not at this stage of the game? I'm going to go with the answer, yes, it is, until we see otherwise out there. So that's what's going on inside of the metals complex out here. You know, inside the XAU, you've got that hammer candle. So if you're inside some of the gold stocks, you stay there. But if you see a break of that hammer candle, it does spell double trouble to you when it comes to Goldilocks. Let's go to John in Sarasota. John, thanks for calling. Thanks for holding. How are you doing today?
Very good, Steve. How about yourself?
Excellent. Thanks so much for asking. And you wanted to look at IBM. Tell me what you're doing, how I can help you.
Well, I had it shorted. Do I need to bail out, or can I hang on?
The short on IBM. Let's take a look at, here's what we do know. There's a new TAS market profile box that just formed over the past couple of days, and IBM has bumped its head up into what basically is the old support level that is right now resistance. What you really don't want to see IBM do is close above 169.17. Now, what that means, John, is that if it closes above 169.16, it's likely going to go move up to the 172.40 level. So you have to determine whether or not that's an acceptable level of pain in the move inside of IBM. You're anticipating, when you took the short trade on IBM, your target is what? Is it the lows down here from January 29th?
Yes.
Okay, so that's your target. We know what your target is out here. You know, this formed a Gartley sell pattern as well, so I can see the trade out here. Let's go see what it's done. It's only made it to level number 1 out of the 5 different potential moves, which means it got back to the 0.382 retracement level, and it did it on June 8th with 3.7 million shares, yesterday 3.3, and today you got 2.4 million shares to the upside. You know, it looks like from a volume standpoint, you know, you're going to be similar type volumes. Price really, you know, let's clean this chart up a little bit here for you. Let's look at a clean chart, because maybe that's going to provide us with a little bit more information. Because one of the things that I'm noticing here as we take a look at a clean chart for IBM is that when it pulled back into this breakout area. You see, John, on the trading day of April 20th, that's really our sign of strength inside of IBM. It's really not the first one. It looks like it's really like the third sign of strength that we've seen in IBM off of that target area that you're looking at from January 29th. So price, in essence, came back and pulled back to a breakout area. Didn't get all the way down to 161.90, but got inside that level and did it with lighter volume. So it says to me, I believe the markets want to move higher. IBM will likely do that as well. Whether it's actually able to take out the May 4th area, that I don't know. But I do believe that if the market didn't find a bottom yesterday or today, it will over the next couple of days. But I believe that bottom is in. Does that help? Or tell me something else that you're looking at here that because this is just like a 120-second cursory view of it.
Okay. The other one is Joe, J-O.
J-O. So let's take a look at Joe. Now, Joe is an ETF for coffee, maybe? Or what is? Yeah, the coffee. Okay.
Coffee.
And are you long or short this?
I have a call on it.
You got a call. Okay, great. Okay. So if I don't know when that call expires, and you'd really have to look at the underlying instrument, the coffee. And I, off the top of my head, don't know what the futures contract is, but let's take a look at this. Well, let me see if I can. I don't trade coffee futures, and I don't. Maybe somebody in the den knows what the coffee futures is. Do you have any chance? No, you probably don't know the symbol. Certainly on the e-signal platform, which is what I would need. But let me just go back to Joe here. If we just simply use the ETF structure, what it did have is it had a nice little sign of strength back on June the 1st out here. So that's some good news, what it's dealing with. Let's just put the TAS profiles out here and give you something to deal with. So this looks pretty promising. If we just simply take a look at our distribution of buyers and sellers out here, you're above a level of support, which should be 22.17. And it's trading at 23.30 right now. So long as it stays above 22.17, it looks to me like you're in pretty good shape on ticker symbol JO, the Bloomberg Coffee sub-index out there. I hope that helps you.
That does. Thank you.
Okay, you bet. Thanks so much for calling, and have a great afternoon. That was John in beautiful, and I do mean beautiful, Sarasota, Florida out here, and that was ticker symbol JO. Let's take a look at a couple of equities here that are moving, and I do mean moving. Let's take a look at some things moving to the downside. Let's take a look at Barian Therapeutics. When these pharma biotech stocks fall apart, they sure do fall apart in a big way. However, in the case of Barian Therapeutics, the reality is, and it's got good volume today, 5.3 million shares, but just like John and I were taking a look at IBM, what we noticed on IBM was that it had, over the past couple of days, pulled back into a breakout area with a lighter volume. Now, in the case of Barian Therapeutics, it's not pulling back into that breakout area with lighter volume. It is pulling back into that breakout area, which is priced out at 77.10, and the breakout had 5.7 million shares. You've done 5.3 million today. What this really says to both you and I, as this level here is held, is that Barian Therapeutics is very likely created a consolidation range between 77.10 and this little gap down from May 22nd could be anywhere from 109.72 to maybe even the high of May 21st at 120.96. So it hasn't completely broken down, very likely just setting up a consolidation pattern. In the case of Regeneron Pharmaceuticals, REGN, let's go take a look at it. This was gapping down today, gapped down right into the support level of its TAS market profile. So as long as Regeneron, REGN, doesn't break 496.73, everything is okay. Now, volume-wise, a bit heavy today, 1.3 million shares, going against, in essence, 1.5 million shares back here on March the 20th. So I don't know how volume's going to trade the next hour and a half or so, 2.5 hours, right? Or the next 2.5 hours. But if it closes below 496, then that would create some potential problems inside of Regeneron Pharmaceuticals. But those are the two leaders dollar-wise to the downside. Let's go take a look at number 3 out here. Let's go take a look at Sears Holdings, SHLD. Now, that's down with some pretty good volume today, 5.6 million shares so far. What is Sears Holding doing out here? Sears Holding is heading back into the swing point from September 25th. That's got 2.7 million shares. Automaker run for 24.10. You're 29.67 as we speak right now. Let's take a look at Tesla, TSLA. That had a nice move a couple of days ago, giving back some of those gains as we speak right now. Let's go see what Tesla is doing. So a couple days ago, 2 days ago, moved up with 5 million shares. Today, pulling back with 2.5 million shares. So you've got Tesla pulling back with light volume after a little bit of a sign of strength up here at these highs. It has held the TAS market profile high. That old resistance now becomes new support out here. Unless there's some volume that comes out of Tesla, it's just simply moving sideways. Up at the highs, though. Well, not at all-time highs, but at the highs here in the 250 area. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market-Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 238. S&P is up 25 points. We began the show, and it's always important to really keep things in perspective. So let me give you a little Stevie perspective out here. First, 2015 has been a difficult year when it comes to the indices to be able to manage the trading, both to the upside and to the downside. So we've seen quite we haven't seen a very volatile market. We've just simply seen a choppy, non-directional market. Remember, markets are going to do one of three things. They're going to trend up, trend down, or trend sideways. We're in a sideways to up trending market out there. Number two, the market's trend is still to the upside. There has been no trends that have been broken to the upside yet. So we have an uptrending market. That means all of the retracements or whatever takes place are buying opportunities. We don't really, intraday, so forth, you get all kinds of selling and buying opportunities. But with regard to the longer-term perspectives out here, longer-term perspectives, the trend is still to the upside. Not until those trends begin to get broken should we be looking at anything other than buying opportunities that are being created out here. Thirdly, I want to take a look at today's action specifically. I don't usually show this chart too often, only because it's not applicable too often. Marty Zweig, the great Marty Zweig out there, he created something called the Zweig breath thrust signals. They're really important to pay attention to. Now, what I was looking for, I was really looking for today, I was hoping for yesterday to be a little bit further of a down day than it was, or at least maybe today to be that, to at least have pushed that Zweig breath signal down below what's referred to as the 0.4. Now, what this is just simply take a look at the 10-day moving average of the New York Stock Exchange, the advances divided by the advances plus the declines out there. And when you take that percentage, what Marty had created many years ago, was that he noticed that when that indicator went below 0.40, and yesterday's reading was 0.408. So, I can't call him up. I can't get him out of the grave, so to speak, to ask him if he would be acceptable to use. But what I can do is come back to the charts and say, hey, what other times have we been? So this is actually the lowest level that we've seen in 2015. Now, this is kind of interesting because the market, with regard to this indicator getting down to its lowest level, we haven't cracked through any swing points to the downside, has got to make you say, something to think about. Remember, there's a series of tools and indicators that you need to use in order to really gauge the market. The market is like a table. It doesn't just have one leg. It's not just all about one indicator. It's not just all about momentum. It's not just all about volume. It's not just all about the power of the angle. You've got to have four legs out here, and you got to pay attention to each of those legs. Now, over the course of the next 10 days, so this said that at least a bottom was being formed. We'll see if over the course of the next 10 days, this oscillator reading can get above the 0.615, 618 area. If it does, it will be putting in something that people will be scratching their heads saying, how can that be? Well, let me tell you, when that does happen, I'm not saying it's going to happen this time, but you've got to pay attention to it. And Stevie here will, of course, pay attention to you for it. But let me tell you, there's only been like 4 or 5 signals since 2007 of these thrusts to the upside. Each time that it has created one, it's been a doozy because we've seen major bottoms being put into the marketplace out here. So this indicator got to its lowest level in 2015. Is there any, and so therefore it's actually not that surprising that you see such a huge update, such a huge relief with the markets moving higher out there. But look, tomorrow's going to be another trading day out there. Remember, we are in wave 7. In the 30-minute chart here for the ES Mini, for the NASDAQ out here, it says a timeout is in order. If that's what we get, you know to anticipate it. If those levels get taken out, it tells you strong like bull. This is Steve Rhodes with TFNN. Have a great Wednesday. I look forward to seeing you tomorrow. Our man, David White, the squeezably soft David White, he's going to be up next. Have a great day, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.